Hello everyone, new video where I show you my strategy, but of course today I didn't enter the market because we have very important news later, and which is the interest rate decision. So we have this weekly volume profile starting from Monday. Of course I'm not using the old one because the new one is already formed and it covers most of the last week range. So this is the range and this is this week's range. So this will be more important than the last week. So what do we have here? We have this cluster, we have this cluster, and we have this cluster, which are high volume nodes. And on the edges we have those cuts in volumes. Those are the best key levels. We have this one, we have on top, of course if you can't do this with the volume profile, just use your eyes. So you see this gap, try to find where the price reacted to it. So it reacted to like on this zone here. So this is volume profile with price action. And we have another level on this here, and we have another one here. So the first thing I'm trying to look for this is a daily volume profile, and the first thing is the cumulative delta. This is the cumulative delta before the New York session. The New York session started at this candle here. So what we can see before is cumulative delta going up, and even when price is going down over here, you can see that price is going down, but the cumulative delta is keeping building up, and this means the institutional interest is at buys more than sells. So this is a very important divergence. And now what we can do is we have this important level that we marked from the weekly, and which is over here. Let me just check, which is from 79 to 82. Okay. Now what happened over here? We can clearly see we have a breakout from this level. Let me delete this so you can see it clearly. We have a breakout from this level, which means we entered the zone of this high volume node. Now what we can do is wait for retest. So price went here, retest, and then another retest on the beginning of the New York session. This retest is what we want. I don't want a retest before the New York session. This retest over here, I'm coming guys, now I'm back. So we have this retest over here that I can go long from. Then where is the target? Of course the target one will be, where is my level? Okay, there, I think there is, or you can't come back to. Anyway, so the first level is going from here to at least this over here, which is where there is a huge volume before. And let me tell you something, institutions are consistently looking for liquidity. So if price come to those areas, then the next target will be those high volume nodes or those tops. Why? Because they are looking for liquidity, and where is the best places they can check if there is still liquidity at those zones, because uh, market participants were interested in those levels before, so they expect to find a possible uh, liquidity there, so they can execute their entries or their orders without moving the price too much. But now, since we're in a New York session and we have cumulative delta going up, even if there is a small pullback here, this means we're ready for a bullish move. And if I'm going to go long, then the target will be at this level from here, and the stop will be at this level over here, at this last rejection. If, of course, I'm talking if we don't have a footprint chart, because most of you don't have the footprint chart, but everyone can get this volume profile if he just goes, or if he opened a free account on TradingView. There is tick volume profile, not real volume, but it's very accurate. It's very accurate, and you can use it normally. So what we can see here, I will have only one risk reward ratio at this level, but since the cumulative delta is going up, and I'll pause the video, since the cumulative delta was going up, and as we can see over here on the seasonality, it's still bullish. This means we're long. If we want to take a position, we're just going long, and happily we get a breakout, and then a retest, and then another retest. So where I would target, of course I'm not going for this because it will be one risk reward ratio. This is so bad, because imagine accumulating all those contracts just to go for 5 points and then reverse. This is not ideal, my friend. So what do you want to target? You want to target the next point of control, which is over here. So your entry will be at this level, stop just below this rejection candle. Of course, if you have footprint chart, then you can have your stop tighter, but most of you do not, as I told you. So this is about 4 risk reward ratio if you target this level where there is this high volume node or high volume peak. So this is how you can trade breakouts. This is a very important idea, and I want you to focus more. And if you don't understand one of my concepts, then I'm getting ready, or I'm making a book called Beyond the Candle. It will be very helpful to read. Thank you guys for watching.